So I wanted to do a short video on why the Federal Reserve is raising rates into a recession, or at least a technical recession. So technical recession just means that we've experienced, or will soon experience, 2 quarters of negative GDP. So the first quarter was a minus 1.6% GDP, meaning our economy is shrinking. And this quarter, it's going to be a negative 1 to 2%, somewhere in that range. And it just, wanted to do a little bit of research on, what is the Fed doing and how are they going about their business. And so, like I said, I wanted to do an episode on it. Congress assigned the Fed the job of achieving maximum employment, keeping stable prices, and also keeping long-term interest rates moderate. And so I started to look at, okay, so what measures always come up when we talk about the Federal Reserve? And there are three measures. One I've already mentioned, which was GDP, which is always reported behind. And matter of fact, all three of these measures are basically driving the car out of the rearview mirror. In other words, they're lagging in nature. So we look at GDP. We know that 3 months have passed before you get the number. So there's a lag there. You have the Consumer Price Index, core CPI, which is missing food and energy. So the measure itself is one that is already flawed, because I don't know many families out there that don't eat or need drive around in their car or need electricity in their homes, etc. So it just, the whole aspect of it, and there's more to get into with regards to that, but I'm not going to do it in this video. And then there's unemployment. And you have to remember that companies, when they do layoffs, they have to plan it. They have to, then execute it, and then they've got to report it, and all this takes time. So that the economy's already in decline by the time layoffs have started. So those are the three things that, or some of the things that I believe influence the Federal Reserve. And from the reading and research that I did, it looks like this may be what's happening. And you just look at different people out there that are talking about the Federal Reserve, and not only what their charge is, but the numbers that they're looking at, because their government numbers are always looking backwards as opposed to looking forward at things like housing starts, and forward-looking measures. I'll do a separate episode on that. So that's what I wanted to cover this week, or in this episode. And remember, there is always a better way.